Okay, what's up, YouTube? Check it out, man. Class is in session. Today's going to be a little bit different. I'm going to show you guys part of what doing your DD looks like, okay? Yup, there's everything from balance sheets to income statements to cash flow, revenue, and learning the PE ratios and things of that nature. But aside from that, what you consume is also part of the mix, okay? Because guys, you have to understand what's coming down the pipe. You have to understand, I often say, understand the sentiment of the market. Know why things are the way they are, okay? Today, I got a short video that I want you to watch, and then we're gonna unpack it as soon as it's done at this conclusion so I can show you what you gotta look out for. And this is why it's important that on this journey, on this 100K journey, you find a trusted voice. Let's get to it.
Within the last 40 years. Just want to get your analysis on what you see happening within the next, couple months, quarter two, quarter three. Do you think we're heading into a bear market, major sell-off, or do you think we continue the bull run? Thank you very much for your time. Have a great day.
It is the market question du jour, and it comes as we kick off a rough start for the year for the overall market. The Dow down 1.2%, S&P 500 down more than 2.5%. And the real pain being felt right now in the tech trade, the NASDAQ dropping more than 5% to start the year. So back to Brian's question. Are we headed into a bear market, or will the bull run continue? Guy Adami, good evening to you. What a treat.
Sarah Eisen, how are you, Sarah? I am so excited. I'm fired up for this Friday night. Are we headed into a bear market? I don't know the definition necessarily. I don't know if it matters, but I'll say this. For a lot of stocks, Brian, as you know, they're already in not only bear market territory, but some of them are in crash territory. I'll say this. If you watch Sarah and Wilf between 3 and 5, she does an amazing job in interviewing these Fed officials and stuff. No, it's true. And
Thank you.
The most important thing that's going on right now, in my opinion, is this 180 that the Fed has done. So if you don't fight the Fed on the way up, you don't fight them on the way down. I'll say this. We've learned about the resilience of the market. I think you're going to continue to see that. I think 45.30, which is about 120 or so S&P handles from here, is your level to take another look. I think Steve Grasso would concur.
Steve Grasso, do you concur?
Well, I never want to leave Guy hanging. So, yes, I concur on his level to the downside. But I also, being in the markets for as long as we both have been, the market always sets up to hurt the most amount of people at any given time. And what does that mean, Sarah? That usually the opposite happens. So if you're looking for 3, 4, or 5 rate hikes, you're not going to get them. So I'm going to go with, as I said on the other show, I feel as if inflation is transitory. Now, transitory is a very gray, opaque word. I still think we're in that transitory category. And if inflation starts to die down, then Chairman Powell is not going to be hard-pressed to do anything. He's not going to raise rates. He's not going to clear the balance sheet.
And that would be good for the market, right?
All of this all at once. It would be good for the market. So I think you're going to get a choppy, very choppy first quarter, and then you're going to see everything ignite again. And maybe it's not going to be the Pelotons or the Zooms or the really high multiple names, but in tech, you're going to get plenty of great value in tech, and I think those names will be bought again and lift the market higher.
Mike, how does this fit into your view of the market in the next few months?
Yeah, I agree with Steve here. I think that the area that people should be most concerned about is the part of the market that is already in a bear market. So some of the names he just mentioned and that we were actually just talking about in the prior half hour, I'm talking about the constituent stocks of things like the ARK ETF. These are the high-flying, high-value, sometimes pandemic-related names. It is the Pelotons. It is Zoom. And, things like that. Those are the ones you definitely want to avoid, in my view. I would think that the S&P itself probably isn't such a terribly risky place to be. Certainly, you sort of have to take a look at it on the basis of where rates are, not just trying to guess where you think they're going to be 3, 6, 9, or 12 months from now. So from that perspective, I think the S&P is probably solid, but the higher flying end of the tech sector is probably the one that I'd want to avoid.
But Guy, those aren't the only ones in a bear market, which is technically defined as 20% off the highs, right? You've got Names like NVIDIA that are now 22% off the highs. Skyworks Solutions, Netflix 25% off the highs ahead of earnings. So are there good opportunities, even if you expect a choppy market, because of the damage we've already seen?
Look, I don't think the story in NVIDIA, Sarah, has changed at all, nor do I think the story in Netflix has fundamentally changed. What has changed, to your point, is the stocks. And that's actually a good thing if you've been looking for opportunities. And you're going to get it in the form of Netflix, I think, probably around this 470 or so level, which it found a bottom at numerous times before that huge run up. And NVIDIA, to your point, that story hasn't changed. The only thing that has changed, to Steve and Mike's point, is the inflation fears and valuations. People are now focused on that. But the NVIDIA story is real. I think you probably have another 5% or so on the downside. And then you step in again. The problem is it's going to look really scary, but you got to try to take emotion out of the equation.
Steve, so if you think that inflation is going to come down and the Fed isn't going to go through with all those interest rate increases, what parts of the market do you want? Do you want to be in the underperforming parts of the market? I know you don't like the ARC or the super high growth, but technology, the mega caps, right. Or do you want to stick with a group like energy, which has really worked this year and worked last year as well?
So energy has done nothing, as you very well know, for 5 years and then just ripped. So you've had dead money just to get back to even for the last 5 years. There's pockets of energy, and Guy has pounded the table on Schlumberger, so kudos to Guy on that. But when you look at let's just pull out the NVIDIA story, or let's just pull out the semiconductor story. So if I don't think that inflation is going to be as bad going forward, what does that mean to chips? Chips are going to have a supply-demand issue. That's the way they trade. Right now, you can't get any supply. If that alleviates, you're going to have a glut of chips hit the market. Not only that, but just think about this, Sarah. What do companies do to combat the supply chain shortage? They overorder, so they front load. So I think we're going to be looking at the best of times for chips right now, and then you're going to see a lot of these stocks fall off a cliff.
Okay, guys, now that was a lot. Hopefully you checked that out. Hopefully you watched it all the way through and you heard some of what was being discussed about whether or not we're in a bear market. See, the thing that I have a problem with, and the thing that I want to kind of hone in on for you all's sake, okay? One, this is why it's important you find a trusted voice, okay? Because the question isn't, are we in a bear market? I showed you guys, and I'm trying to show it here. You got the NASDAQ with plays down over 50%. I can show you other plays like Netflix and other so-called quality companies that's down 20%. That equals a bear market, okay? But check this out, guys. That's not the right title. But when you're trying to instill fear, when you're trying to create uncertainty, and when you're trying to create doubt in the retail investors, you're talking about whether or not we're in a bear market, as opposed to saying and telling the world, this is in fact where millionaires are made. This is where the wealth actually comes from. Check this out, guys. 2008 and any other monumental period in the stock market, 2020, COVID crash, no matter where you go, no matter how far back you look, for those of you that like to do your research and know the history of the market, guys, from Warren Buffett, no matter who you guys are holding on a pedestal in terms of investing, all of them built their money, all of them built their wealth on the downturns in the market, the bear markets, the times the market pulled back 20%, 30%, 40%, 50%. Guys, we're in such a time right here and right now. This is not the time to panic. YouTube is unsubscribing people. YouTube is suppressing videos, and I'm gonna talk about that, the toxicity of YouTube in the next video. But listen, this is not the time for you to panic. This is when we pounce, as I often say. We don't panic, we pounce. Guys, this is the time wealth is made. I often tell you guys, me and my wife are young. We were able to retire early. We were able to retire young. Half of how we did that, not only being debt free, not only being smart with our money, without only doing the things the right way across the board, it was taking advantage of downturns in the market such as this. We didn't run, we didn't complain, we didn't stop watching financial information. We didn't stop reading because the market was down. We was looking at how we can maximize this opportunity, understanding the market 100 times out of 100 times have always bounced back. This time will be no different. The only thing you guys got to look out for is the time it will take for the turnaround to occur, because the turnaround is inevitable. Okay, so listen guys, you got to stay buckled in, because I'm about to start applying heavy pressure, and only the strong will survive. Okay, because right now is the time that we need to be buying some of these assets that are beaten down, that's at low and great attractive prices. Now is the time we need to be adding our money every 2 weeks into our investment portfolios or into our brokerages account, building it up, building our cash so that we can take advantage of these great deals at these great levels. Okay, but listen, it's not about whether or not we are in a bear market. Those of us that's been in the game, we know that already. Okay, we've seen the manipulation, we've seen them drive many plays down to the dirt. The thing is whether or not you guys have the fortitude to kind of stick it out, see what this is, see what they're trying to do. And the thing that I made this video for, more importantly, guys, was to tell you, they should be telling you, this is not about whether or not asking a question, we're in a bear market. They should be telling you guys, this is the time millionaires are built. This is the time wealth and true wealth is created, a time such as this. And so I wanted to hop on here today really quickly, man, and let you guys know right now is how you guys are gonna get yourself out your situation. Matter of fact, I often say, yes, I've made plenty millionaires, but guys, I might have a chance to make over 300, 400,000 of you that based on decisions you make by where the market is at right now. Listen, guys, we don't panic, we pounce. And don't forget, when they sleep, we eat. Guys, I'll see you guys in the next one. But remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below. And I'll see you all in the next one. Peace.